Revenue means the amount which is received from the sale of goods and services to the customer. So that amount is called as what? Revenue. The duration of the payment is very small, which is less than 1 year. So they are termed as current liabilities. Now what do you mean by liability? So liability in the sense the amount that has to be paid to the outsiders. So that is known as liability. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. My dear students, today we are in the 6th session of Unit 1 of the subject Fundamentals of Business Accounting, and this is for first sem B.B.A students. So your Unit 1 is all about Introduction to Financial Accounting. So already we have discussed few of the concept under this. So we were learning about the basic terms which are used in accounting. So let us quickly recall what we have discussed in a previous session. So in a previous session, I have covered this topic, that is, we were discussing about qualitative characteristics of accounting information. So once the accountant has prepared the accounting information, so that has to be communicated to the users. So it may be internal users or external users. So there are certain qualities that the accounting information should have. So that we have discussed in a previous session, that is qualitative characteristics of accounting information. So what are the qualities an accounting information should have so that it can be easily communicated to the users? Next, we have learnt about basic terms in accounting. So we were discussing about few of the accounting terms which are used in accounting. So we have learnt about business transactions, we have learnt about assets and few more terms which are used in accounting. So in today's session also, we shall continue with few more other terms what are used in financial accounting. Now coming to the next one, that is liability. So we have already learnt about assets, where we have learned that there are mainly two types of asset. One is current asset as well as non-current asset. That is also called as what? Fixed asset. Now let us see the next term, that is liability. Now what do you mean by liability? Of course, for each and every organization, in order to know the financial position, so we have to know the total value of assets and the total value of liabilities. Now let us see what is liability. So it refers to the amount which a firm owes to the outsiders. So it's not that the organization will have that much amount of money in order to undertake its business activity. So there may be a chances that where it has to borrow from the outsiders. So that borrowed amount which has to be returned back to the outsiders, so that is known as what? Liability. Now what do you mean by liability? So liability in the sense the amount that has to be paid to the outsiders. So that is known as liability. For example, if the organization have borrowed loan from the financial institution, of course it has to be returned back, right? So that amount which the organization has to pay back, so that is known as what? Liability. So it refers to the amount which the firm owes to the outsiders. That is, the amount to be paid to the outsiders is called as liability. In the words of Finney and Miller, liabilities are debts that they are amount or they are amounts owed to the creditors. So it's nothing but the debt. So debt means what? The amount that has to be paid to the outsiders. So it is a debt that has to be paid to the outsiders. It's nothing but the creditors. So creditors is always what? It's a liability. So this can be expressed as liability is equal to asset minus capital. So you know about the accounting equation. So what is the accounting equation? Assets is equal to liability plus capital. So your accounting equation is assets is equal to liabilities plus capital. So this formula, so in order to know the formula of liability, so what is the formula of liability? You have to just interchange here. Okay. So your formula will be liability is equal to asset minus capital, so that you get the liability. So if you just know this accounting equation, so whenever you want to know about the liability, you can reverse the formula. In the same way, if you want to know about the capital, you can reverse the formula. So here the formula for liability is equal to asset minus capital. So liability may be further classified into two parts as under. So let us see what are the types of liabilities here. So here we have two main types. So the first one is non-current liabilities. So we have learnt about non-current assets. In the same way, there are non-current liabilities also. Now let us see what is this non-current liability. So non-current in the sense, so it will not be in a regular nature. So it will not recurring in nature. So they are known as what? Non-current. So these refers to those liability which fall due for payment in a relatively longer period. So if you see here, liability means what? The amount that has to be paid to the outsiders. So here non-current liability in the sense, the amount that has to be paid to the outsider is for a longer period of time, or it is more than 1 year. Then it is known as non-current liability. So normally more than 1 year. So here the payment has to be made more than 1 year. So they are termed as what? Non-current liability. For example, long-term loans and debentures, etc. So here if the organization have borrowed long-term loans and the payment or the duration of payment is more than 1 year, then it is known as what? Non-current liability. Now coming to the second type, that is current liabilities. Now what is this current liability? So these are refers to those liability which are paid in near future. So it is opposite to non-current liability, whereas this current liability to be paid in near future. So here the duration is very small, that is normally less than 1 year. So the duration of the payment is very small, which is less than 1 year. So they are termed as current liabilities. For example, bank overdraft, bills payable, creditors, outstanding expenses and short-term loans, etc. So these are the best example for current liability where the duration is very short, that is less than 1 year. Now coming to the next term, that is sales. Now let us see what is this sales in accounting. So you are all familiar with purchases as well as sales. Now let us see what is this sales. Sales are total revenue from goods or services sold or provided to the customer. So the goods or the revenue which is earned by the sale of goods or services to the customer is called as sales in accounting. So sales may be cash sales or credit sales. Now there are two types of sales. So as we all know, there are two types of transaction. One is cash transaction, other one is credit transaction. Now what do you mean by cash transaction? Here the transaction which takes place where the payment of cash or receiving of the cash is made immediately, then it is known as cash transaction. Whereas credit transaction, so these are the transaction where the payment or receiving of the cash is not made immediately, but in the future they are going to make the payment or receive the amount. So they are known as credit transaction. So here also in case of sales, so sales can be cash sales or credit sales. Now what do I mean by cash sales? Here the goods will be sold but the cash is received immediately. That is known as cash sales. Whereas coming to credit sale, so here the goods are sold but the payment is not received immediately. In the future, we are going to receive the payment. So they are termed as credit sales. So hope you are clear with sales. So sales is nothing but the total revenue which is earned from the sale of goods and services to the customer is called as sales. Now coming to the next one, revenue. Now let us see what is this revenue. So these are the amount of the business earned by selling its product or providing services to the customers called as revenue. Now what do you mean by revenue? So while selling the goods and services to the customers, whatever the amount which is being received, so that amount is called as revenue. So other items of revenue common to many business are, that is commission received, interest received, dividend received, royalties, rent received, etc. So revenue is also called as income. So what you have to remember here, revenue means the amount which is received from the sale of goods and services to the customer. So that amount is called as what? Revenue. Next one is expenses. Now what is this expenses? The cost incurred by the business in the process of earning revenue. So whatever the cost which is incurred in the process of earning revenue, so that cost is called as what? Expenses. So generally expenses are measured by the cost of the asset consumed or services used during the accounting period. So whatever the assets which is been consumed, on the basis of that the expenses will be calculated. So expenses means what? The process of earning revenue. So the cost which is incurred in the process of earning revenue, so that is termed as what? Expenses. The usual items of expenses are depreciation, wages, salaries, rent, interest paid, cost of the heater, lighting and water, telephone, etc. So telephone charges, etc. So these are all what? Expenses. That is the cost which is incurred while earning the revenue. So whatever the cost, the total cost is called as what? Expenses. Next one is expenditure. Now let us see what is the difference between expenses and expenditure. So spending money or incurring a liability for some benefit. So here also there will be some benefit for which the money will be spent or a liability will be incurred. So it may be service or property received is called as expenditure. So spending money on some benefit which is going to be received. So that is known as expenditure. So purchase of goods, purchase of machinery. So these are all used in the production process. So suppose if you see here purchase of machinery. So these are used in the production process where the organization is going to get some benefit in the future. So they are termed as what? Expenditure, and the amount is too huge when compared to expenses. That is termed as expenditure. So purchase of furniture, etc. are the examples of expenditure. Now how you can differentiate expenses as well as expenditure? Expenses are those costs which is incurred while earning the revenue, but it is in the small amount. Whereas expenditure, so here also some amount will be invested for which the benefit will be given in the future or got in the future, and the amount will be in the larger amount. So that is termed as expenditure. So if the benefit of the expenditure is exhausted, so if the benefit from which the expenditure is been incurred, so if it is exhausted within 1 year, then it is termed as what? Expenses. So if the benefit of the expenditure is exhausted within 1 year, it is called as expenses, also called as revenue expenditure. So revenue expenditure is nothing but the expenses where the benefit will be exhausted within 1 year. And on the other hand, the benefit of an expenditure lasts for more than 1 year. So if it is more than 1 year, it is treated as an asset, also called as capital expenditure, such as purchase of machinery, furniture, land, etc. So these are the best examples for capital expenditure where the benefit will be more than 1 year. So if the benefit is exhausted within 1 year, it is termed as expenses, or it is also called as revenue expenditure, whereas capital expenditure where the benefit will be more than 1 year. So for example, purchase of machinery. So they need not purchase machinery again and again, right? So that long-term investment which is made in the machinery, so that is termed as expenditure. So hope you are clear with the expenses as well as expenditure. Now moving on to the next concept, that is theory base of accounting. So let us see what is this theory base of accounting. So we all know that accounting is a practical subject, but of course we need some theoretical aspects which has to be studied. So that we have already learned that accounting is a science as well as art. Why it is called as a science? Because it contains some theoretical aspect. So all the theoretical knowledge will be there in accounting, which will be applied in the practical problems in order to solve the problem. So the theoretical aspect is called as science, and the practical thing what we are going to apply, so that is called as an art. Now let us see what is this theory base of accounting. So theory base of accounting consists of principles, concepts, conventions, rules and guidelines developed over a period of time to bring uniformity and consistency to the process of accounting in order to enhance its utility to the various users of accounting information. Now, what do you mean by this? So, it's not just that as per my wish, I can record the transaction and I can show the financial statement. So, in order to bring the uniformity, so if I am not following any of the concepts, any of the conventions or any of the accounting principles and recording the books of accounts on my own, then the accuracy of accounting information will not be there. So, in order to bring uniformity or in order to make the accounting information more accurate, there are certain theoretical aspects, that is, which is called as theory base of accounting, which contains accounting concepts, accounting conventions, accounting principles. So, this tells us that how we have to record the transaction, how each and every transaction in the books of account has to be recorded. For that, there is a theoretical aspect which is called as what? Theory base of accounting. Now, you might have a question, why we have to follow that theory, that is theory of accounting. So, the main thing is that in order to bring uniformity in the accounting information. Suppose this accounting information will be used in order to compare the accounting results from one year to another year and from one organization to another organization. So, suppose if we are not following any of the accounting concepts, any of the accounting conventions or any of the accounting principles, it is very difficult to compare from one accounting year to another accounting year or from one organization to another organization. It's because suppose if one organization is following all these theoretical aspects and the other is not following, then the profitability of these two organizations cannot be compared because there is no uniformity in the accounting information. So, in order to bring uniformity or in order to make the comparison very easy, so this accounting or the theory base of accounting is very important. In addition, accounting standards issued by the Institute of Chartered Accountants of India, that is ICAI, also constitute the theory base of accounting. So, here what you have to remember, in order to bring uniformity in the accounting information or in order to make the easy comparison of accounting results from one organization to another and from one accounting year to another accounting year. So, this theory base of accounting is very important, which includes accounting principles, accounting concepts, accounting conventions, accounting rules and guidelines and also accounting standards which is given by ICAI, that is Institute of Chartered Accountant of India. So, this is about the theory base of accounting. Now, coming to the accounting principle. So, let us see what is the meaning of this accounting principle. So, accounting statement disclose the profitability as well as solvency of the business to various parties. Of course, at the end of each and every accounting year, we have to prepare the financial statement. So, what is the main intention of preparing the financial statement? So, in order to know what is the financial position of the business, and that financial position or that accounting information will be communicated to the users so that each and every user will come to know about the position of the business organization. So, it is therefore necessary that such statement should be prepared according to some standard language and set rules. So, in order to maintain that standard of accounting information, we have to follow certain accounting principles as well as accounting rules. So, for that reason, this accounting principle is been introduced. So, these rules are usually called as generally accepted accounting principles, so which we call it as gap. Now, what is this gap? In order to bring uniformity or in order to maintain that standard in the accounting information, certain accounting principles has been introduced or it is being given by generally accepted accounting principles, which contains all the principles that has to be followed while recording accounting transactions in order to get the accurate accounting information. So, these principles have been generally accepted by the accountants all over the world as general guidelines for preparing the accounting statement. So, whatever the principles which are there in GAP, that is generally accepted accounting principle, is followed all over the world. So, each and every accountant has to follow this generally accepted accounting principles in order to make the accounting information more standardized. So, these principles have developed over a course of period from usage, reason, common experience, historical precedents, statements of individuals, professional bodies and regulations of the government agency. So, it was not an easy task in order to include all the principles in the GAP. So, there are number of individuals who have struggled behind that in order to get this principle standardized. So, they have taken a longer period of time where number of professionals have come together and they have recorded these accounting principles. Now, let us see about the GAP. So, we have learnt about the introduction of accounting principle. Now, let us see what is this GAP is all about. So, GAP means what? Generally accepted accounting principle. So, generally accepted accounting principle refers to the rules or guidelines. So, what does it contain? So, it contains all the rules and guidelines adopted for recording and reporting of the business transaction. So, in order to record as well as after recording, once we are going to prepare the financial statement, so that financial results has to be reported to the users. So, till then, whatever the rules or guidelines to be followed, so that are included in the GAP. So, as I told you, it was not an easy task. So, there are number of professional or there are number of persons who have joined together and they have done this generally accepted accounting principles. So, here it contains what? It contains rules or guidelines. It contains all the rules and guidelines in order to record the transaction, and once the recording starts, till the financial statement is prepared at the end of the financial year. So, what are the rules and guidelines to be followed? So, everything that are included in the GAP. The purpose is to bring uniformity. Of course, the main intention is to bring the uniformity in the accounting information. So, uniformity in the preparation as well as presentation of the financial statement. So, as I told you, if the organization wants to compare its results with that of other organization, then it has to make sure that both the organizations are following same principles. Then only we can compare, or else the comparison is not possible. So, in order to bring uniformity, that is uniformity in the preparation of financial statements and the reporting of the financial position to the users. So, in order to bring the uniformity, so this GAP has been introduced. Hope you are clear with this GAP. Now, let us see the next concept, that is kinds of accounting principles. So, we have already learnt why this accounting principles has been introduced and what is the meaning of GAP. Now, let us see what are the kinds of accounting principles. So, there are mainly two types. One is accounting concepts or assumptions and the next one is accounting conventions. So, in accounting principles, we have accounting concepts or assumptions and the next one is accounting conventions. So, in my next session, we shall discuss about one type of accounting principle, that is basic accounting concepts. So, let us see what are the accounting concepts which are included in the accounting principles. So, this is an important topic we shall discuss in the next session. So, my dear students, hope you have understood today's session. See you all in my next session with a new topic. Till then, take care. Thank you.